Hello there, Maverick traders. Hopefully everyone is enjoying their weekend because we get a couple days off and then it is back to the grind for this week. In this session, we're going to cover what happened last week. Last week was a decent trading week. I have not been super excited about Forex trading lately. I've been much more excited about crypto trading, and the cryptos had a great week this week. But we're starting to get some movements in Forex, and I'm getting really encouraged that Forex is going to become a better trade than crypto over the rest of the year. We'll take a look at all the markets as they are right now, score everything from +3 to -3, and then we are going to pair up the strongest versus the weakest.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
We saw basically 5 days of sideways last week. Equities are closing, mildly to the upside, very mildly, but what we saw is they did not go down. We had a huge rally in November. We based for a couple days, had another huge rally in the end part of November. And for most of December, we've just been churning a little bit higher and sideways. Last week, I talked about why this market is very unlikely to fall through the end of the year. We've got year-end performance chasing. We've got tons of seasonality patterns that are definitely in the favor of this market staying bullish. And I talked about how the bid was very thick. Anytime there was any sort of pullback, people rushed in to buy. The equity markets are likely going to stay strong through the rest of the year. We heard from 2 central banks. We heard from the Reserve Bank of Australia and the Bank of Canada, and they both basically said, we're happy where we are. This week, we have 4 central banks on the schedule this week, and all 4 are supposed to do just the same thing as the RBA and the BOC. We don't expect there to be really any change in interest rate policy. And then we saw the yen rally. Now, for those of you who know about the BOJ and what they've been doing, they basically did a variation of what we did in the US after the recession in 2008, where basically they would go in and sell one end of the curve and buy the other end of the curve, basically flattening it out. So what they've done is they've been controlling interest rates in Japan really for about the last 5 or 6 years. And this has really kept a lid on everything. There is speculation that the Bank of Japan is going to let that go. When they let that go, interest rates are going to dramatically change in Japan, which means that we're going to see a lot of movement in that Japanese yen. Anyone who's been using the yen as a carry trade, where they've been buying higher yielding currencies and selling the yen, that trade has to unwind and unwind quickly. And that's why we're seeing such strength. Last week, we had just a few important economic reports. I really want to cover what happened in the US because US data was most of the data we got this week. And it was what is known as Goldilocks. Goldilocks is a term where everything is perfect. It's not too hot, it's not too cold. If you know the story about Goldilocks and the 3 bears, some stuff was too hot, some stuff was too cold, and she ended up finding the exact right spot. This is what we mean by Goldilocks. Take a look first at the services PMI out of the US. Now, this is 2/3 of the economy in the US. It was better than expected. So we're getting better than expected economic growth. And then the things that the Fed is worried about, job growth getting out of control. Well, look, job openings down. Employment lower than expected. Now, we did get a report on Friday that was a little bit better than expected. But you know what? This is exactly what the market wants. They want job growth to slow down. They want everything to slow down, but not go into recession. And this is exactly what we're getting here in the US. And you can see consumer sentiment is rising in the US. This is a perfect scenario for the Fed. They are very, very happy with where they are, which, ironically, we are going to hear from the Fed this week on Wednesday. So let's go in and take a look at the numbers from last week, and we'll put a bow on this week, and we'll wrap it up and send it away. S&P was basically flat for the week. We closed on our high last week. As you can see, this was last Friday's candle. We gapped down, and then we basically clawed all the way back up to where we closed on Friday. So overall, this is a very strong market. As you can see, it is absolutely refusing to go down. If we take a look at the other asset classes, take a look at crypto. What a week. We had really liked both Bitcoin and Ethereum, but Bitcoin number one. Great week. Gold and oil getting killed. Basic materials getting killed. Oil down at $71 is very, very supportive of economic growth. Here's what we saw in the Forex market. Now, we talked about the yen, and I had a lot of conversations with traders this week about the yen, saying, hey, what's the yen doing? It shouldn't be so strong. And look, if there was no news going on with the Bank of Japan, you're right. This would be very strange. But the Bank of Japan is absolutely in play. And going into the Bank of Japan's next meeting, I expect that we're going to see a lot of people wanting to buy yen in anticipation of a change. The dollar was strong. I had dollar as my number one short last week, and I waited patiently. And guess what? I waited all week long, did not take one single trade on dollar because it just never really triggered. Aussie and Kiwi, these were my favorites, saying, hey, I want to go long Aussie and Kiwi if I'm going to do a Forex trade. And guess what? Never. I just sat there waiting until they showed strength. They never showed strength. So as you can see, there are better moves here than we've seen over the past couple weeks. These are decent moves. Now look, the yen move, 2.5% was killer. But when we take a look at euro versus dollar was a 1.2% move. That's a decent move in a week. We've been seeing like 0.2, 0.3% moves lately. That's why I really like what I'm seeing in the Forex market. I do think it's going to start to get a little bit better going into the end of the year. We've liked the crypto markets, and we've really liked Bitcoin, and that was the best performer out of the four major ones this week. Ethereum also up 7%. We'll take a look at these charts. I think that we're going to start to see the action move to another place in the markets. I think the run in crypto is going to take a little pause here for a little bit. We'll talk about this in a second. So let's get into these markets, and let's take a look at where things stand. Now, I'm going to jump over to Ankit and really ask Ankit his opinion on interest rates, because we have seen just a huge fall from 5% that we saw back in late October all the way down to 4.1%. Ankit, what do you make of this interest rate move, and what do you think is going to be the asset class that benefits the best?
You know, it's a good question about this whole interest rate, because again, we've seen the same story playing out over and over. Even same thing last year too. We had the exact same situation where, you know, we saw the CPI falling and suddenly everything shifted around and we got a big drop in November and December in the bond yields. And I think that's exactly where we are. We still have a strong economy. You know, the inflation numbers are dropping. We're going to have a next inflation number next week. But I think same thing, we had to look at when the interest rate falls, what things really helps the most and vice versa. So we are seeing this where interest rates are falling, which is really helping the broader markets to even go higher, performance chasing. There's no fear. That's really what we are seeing. But again, I think that's where we are. Nothing really has changed. We had a solid jobs report today. The unemployment rate also fell. So I think we are in the same story playing out over and over again, where we have a strong economy, but then we still have the fear for the inflation to continue to go up, especially if the demand goes higher. So I think that's really where I stand for that. Nothing has changed for me. I think we're just in this period of November and December, just like last year, we're seeing a drop in these things. And on the contrary, we'll probably see the dollar fall along with it, and then we'll see money going to the cryptos or money going into the equity markets.
And I like really what you said is that there's really no fear. And I agree with you 100%. And I was pretty clear last week. I said, look, I think we get a rally into the end of the year. I don't think it's a crazy rally. You know, there's some Decembers where we might rally 6, 7, 8% in equities. I said I think we're up 2 to 3%. it's really setting up to be a nice rally. And here's cryptos. We loved cryptos off of the high base breakout, and you can see they broke out, and we're just doing another little high base here. So this is the crypto basket. We're going to take a look at Bitcoin specifically. And the question is, does the Bitcoin move have more in it, or is there going to be a little bit of a break? Let's take a look at what we have up here on the schedule. Now, we had to break this up into 2 different pages because there is so much information that's going to be coming our way. First thing I want to point out, CPI out of the US. CPI out of the US on Tuesday morning. And then just take a look. We have pound, we have both claimant count change, and we have GDP. I mean, this is just on Tuesday. And then take a look. We have the first central bank. We have the FOMC. They are going to be staying at 5.5%. There is literally 0% chance of there being any move other than where they are. But we get that press conference, and we know that sometimes Powell can say some things that get that to move. Next, Kiwi, GDP. This week is just absolutely filled up with tradable news events. We are going to see some really good movements in the Forex market this week. Just like I said, we're already getting some budding volatility that we saw last week, and now we just have a week that's absolutely crazy. So on Thursday, we get the SNB, we get the Bank of England, and we get the ECB. So as you can see here, so much on the calendar here. This should be a really, really good week of trading. So Maverick traders, what that means is you do want to become more active. I've been really pushing over the last 2 to 3 weeks for our traders to be less active. Now, guess what? It's time to go. This week is going to be a really good trading week. You should be looking for more trades this week than we've seen over the last couple of weeks. So I don't want to go over any more of the schedule. We've already gone through it, but again, check the schedule. Everything is packed this week. So let's go in and take a look at each currency one by one. I'm going to go through the cryptos. Ankit will go through Forex. We've loved Bitcoin. We've loved Bitcoin. It's been our favorite one. We said, hey, when this thing breaks out, it's going to be a nice run. And boy, was it a nice run. It was about a 16% run. Okay, so here we are. We are now high basing. We just had a 16-point run. That run came after a full month of consolidation. So yes, we are consolidating. This is a high base. Very true. I still want to be bullish on Bitcoin, but the next move, let's say we do break out of this base in the next couple days, we can't expect it to be as large of a move as we just got because we had a month of consolidation going into that move. So I'm definitely less bullish here than I was in Bitcoin. So here's the question. Is there anything that's going to play catch up here? Do we have any cryptos that are earlier on in their run? Bitcoin Cash has been one that has underperformed. I'm just not interested in it. So let's see if we can find something else. I talked about this in my end of day video on Monday, and I said, hey, look, Ethereum is a little bit later on in its run. And I think Ethereum still has some gas in it. And you can see that on Thursday, we broke out of a 2-day high base and went higher. I actually like Ethereum better than Bitcoin at this point. I think it's a better trade. I think Bitcoin is going to be resting for a bit. I talked about Litecoin as well, and I said, hey, look, this is the thing that has the most momentum on Friday. And this thing, as you can see here, had a really nice run here. So Litecoin is also a potential buy in my mind in the cryptos. So to wrap it up, Bitcoin I think is going to be a little bit of a hold here. I think Ethereum and Litecoin are going to be better trades this week. Ankit, you want to take us through the Forex markets?
Absolutely. Let's start with the US dollar. Again, looking at this chart, below the 20, below the 50, we are in a trend score of a -3. But for the velocity, we are at a +2. So pretty much it's so today, Friday, we saw the opposite of velocity scores in a lot of currencies. So overall, what I would want to point out is that we are consolidating. Entire November, we were dropping. Now we have entered into a consolidation phase. And remember, we can consolidate for longer before we can break down significantly one way or the other. And I think this week is the right week where we have these catalysts for all of these currencies to have a big move one way or the other, based on what the central banks will say, especially with the U.S. because not only we have the U.S. FOMC, but we also have CPI coming out as well. So I'm really watching this, even though it's in a consolidation phase. I'm going in this week with a bit of a blank slate and just kind of react to whichever way we move. But for now, you can see it can go both ways during a consolidation phase. Now, the Japanese yen is the one that I know. We look at the chart. We went from a -2, -1 now to a +2. So after a big move like this, again, we still, I think, have to wait till the Bank of Japan meeting that's due on December 18 and 19. This is, again, early speculation. So there's this, things cannot just maybe not pan out the way everyone is expecting. So I think this trade, I'll put it on hold until the following week. I think next week I'll just want to focus on whatever the other currencies are moving. But for now, I think the yen, we can expect some volatility as we see these big moves are shifting one way or the other. So watch out for volatility in the Japanese yen. Now, let's take a look at European currencies. And I want to point out that it's not the dollar that's really weak. Unlike last year, dollar was falling apart. This is not the case this year. We have the dollar weak, but now we also have some of the European currencies are not performing well. I want to point out that Swiss franc has been the best performing currency since last year. I think this is a currency that stands at a risk of correction, especially we saw it last week. The S&B inflation rate is actually negative now. So I think we can see a softer tone from the Swiss bank. And if that's the case, we can see some pullback here. But for now, you can see that we are right at the 50-day moving average. If we break below, we can easily test that November low. But right now, I do like some of the European currencies to the downside. And taking a look at the euro, same scenario. I mean, we saw how the U.S. dollar was doing. I mean, take a look at the euro, doing the exact same thing. I like some of the, like I said, I want to open the options, not only solely focus on the dollar pairs, but I think we need to focus on some of the European currencies as well, going into next week. But for now, you can see -2. Now the pound, which I was also on a negative opinion, I think right now it's not really falling apart as the euro is, but I think I like the direction to the downside. Remember, these are the currencies that's done the best since last year. They do stand a chance for a correction. Again, we have the Bank of England due next week as well, and we have seen the inflation data out of the UK has been dropping. So again, there's a lot more reason for these central banks to be not as hawkish, but I'm talking more on a neutral to a little dovish side. So that's where we are. Now, let's talk about the growth currencies. So along with the US dollar, Canadian dollar is doing the exact same thing. It's in a consolidation phase, below, again, 20 to 50 to moving average. But remember, this is a consolidation phase. And look what happened today. We had a nice little rally. We're at +2. So this is what happened. In consolidation, we can have one up day and a one down day. It doesn't have the aggressive move one way or the other. It's just going back and forth. So again, whatever happens next week with the US dollar, I think the Canadian dollar likely to do the same. This week, we have Bank of Canada. They did not change rates, but you can see that the Canadian dollar didn't fall apart on that. So I think the CAD is likely to be in this consolidation phase for the next week. Now, the Aussie and Kiwi, I think that's where we tend to focus around this time of the year, because again, this time of the year where we get these performance chasing, as we talk about in the equity markets, we get this risk on sentiment, and we see these currencies rally. So last year, Kiwi was the best currency, October to November, December. This year, I'm not really seeing that. Take a look at the Aussie, sideways. Aussie's not moving, even though it's slightly better than the Kiwi. It's not the price action I would have loved to see, especially when you compare it to the equity markets. Now, again, Kiwi, same thing. It's at a +2 and a +3, but we are pulling back in a week. I mean, the last few days has been pulling back. So is this in a buying opportunity? I think the Kiwi, it only looks the best, but take a look at today. Kiwi is down the most. So I think we are in this period in the currency market where It's not just moving with the risk trends. It's doing its own thing. And I think that's what we need to focus on next week. We need to focus on individually what the currencies do, what the central banks or what the numbers do, and what drives the move. I think that's really the big driver here in the currency market. Back to you, Rob.
Thanks, Ankit. Great breakdown. And I agree that the Aussie and Kiwi have been not acting correctly. And all I mean by correctly is that they're not doing what they should do. And we have a saying at Maverick here, when something is not doing what it should do, it's a clear sign that it's going to keep not doing it for a while. So look, I've been on the Aussie Kiwi bandwagon the last week or two, and I got to say, they're just not acting right. So where can you trade in spite of that? As you can see, it's very clear what's weak. Dollar, European currencies are weak, and I agree with you, the CAD is going to do what the dollar does. So the question is, what do you go long? And if you don't have any faith in the Aussie and Kiwi, look, there's only one foreign currency standing there, and that is the yen. And I'm going to echo what Ankit said. I think the yen is the most dangerous trade out there right now. I think you definitely do not want to be short yen. I would rather be long yen than short yen. But there's a lot of news flowing around there, and you could get some real volatility on yen. So there's a ton of stuff to be short on in Forex, but the problem is there's not a ton of stuff to be long unless you want to take your shot with the yen. If you don't, then all of a sudden now you're looking at cryptos. And I think Ethereum and Litecoin are likely your best bet when taking a look at the crypto market. This being said, remember, this is a huge week. And by the end of the week, we're going to have wildly different scores across the board. So as Ankit said, I think go into the week maybe a little cautious, but make sure that you are noticing things, how things are moving. If the US dollar starts to fall substantially and we start to see the Aussie Kiwi start to act well, you can take those trades later in the week once you start to get the price action moving the way you want. So really for me, I'm going to take a look at a few yen crosses. And then I'm going to go back and take a look at that Ethereum chart and put together some actual buying points. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? So we have Ethereum has broken out of this base, and you can see it's had a nice run. So 2150 up to 2350. That's about a 9% run. 9% run. Bitcoin had 16% run. So Ethereum, I think, has got a little bit of catch up. The big question is, where's the entry point here? And you can see we've had a couple of nice entry points over the last little bit. We've had this little pullback or base here, this little pullback. So we're getting the same thing here. I think that it's just a matter of time until we get this pullback. I would love to get a pullback all the way to this level. I don't think we're going to get a pullback that deep around the 2312 area. I think the pullback is likely it could be right here where it is, 2140. We'll have to see what happens with this candle. But look, it's in a pullback. You don't want to be rushing in and buying it right now, but you want to start building your premise. You want to start building your trade that if we pull back, we get down below that 2340. Now I want to start to look at what happens at 2320. And if we get some good price action off there, I get a nice confirmation candle there. Then all of a sudden I can start to build my trade and look to be long. So Ethereum, again, 2320 would be a beautiful place to start looking to go long. But again, not when it's going down. It goes down there and bounces and starts to go back up. maybe 23.30 is where you can get it in. So this is my favorite trade for the early part of the week. Now looking at Forex, I'm going to go to dollar yen. I think this is a very interesting chart, and I'm going to go to a weekly chart, and I just want to show everybody what has happened since 2021. This was at $1, at 100, basically 100. We got all the way up to 150. That's a really big move in currency. That's a 50% move and change in a currency cross over 2.5, 3 years of time. Look what happens when we do get to these extreme levels. 150 all the way down to 128. I think we easily could be getting one of these style pullbacks that we got at the end of 2022. So the question is, where's the entry? And that is the million-dollar question of where is the entry. We just had a big fall. We just had a big fall off of this base. So I'm not super excited here. I would love to see a rally up to the 146 area. A rally up to 146, hit your head up against that resistance. To me, that is the best looking trade you can find out there. So I really like dollar yen. I think these two are moving in opposite directions at the moment. Even though they both were up this last week, I think once we hear from the Fed and if the Fed backs off a little bit, I think dollar yen is the place to be. Ankit, where are you looking for trades this week?
Hey, Rob. Well, I first want to echo with that. Like, I totally agree. This whole yen trade is a trade that everyone is watching, and it's also the most riskiest trade. I want to point out that there's a lot of early speculation, and then there's going to be the big trade when the central bank make that shift. And there's going to be a lot of opportunity ahead. I think it's better to wait till the Bank of Japan meeting on 18th and 19th and see if there's any change. But until then, we might just get that back and forth. But this is the most heavily one-way position. When it unwinds, again, that's going to cause a lot of movement. So I agree with that. But outside of that, I was just scouring through the charts, and I must say that I couldn't really find that really stand out to me the most one way or the other. I'm really right in the middle here, and I'm okay to go either way depending on what happens next week. And like I said, I'm only looking to trade news events. I think that's really the driving force. And realize that where we are this year, we are in this. I think the next year probably be one of the best remaining week that we have left for this year. Because after that, we're gonna go into the holiday season. We're probably not gonna find a whole lot for the following remaining 2 weeks. So I personally do not have the best looking currency because I don't want to be biased towards one way or the other. I just want to trade the news. So like I said, going with a blank slate.
Blanca, you're simply just reacting to what the market is showing us. We don't have any good currencies to go long other than the yen, and we've pointed out all of the reasons why the yen trade could be a very, very sketchy, difficult trade with all the news flowing around it. But other than that, it's very clear of what to be short. It's crystal clear of what to be short. The problem is it's not clear of what to be long. And I think that's where you're coming from. That's where I'm coming from, is that there's just nothing out there that's showing strength at the moment. So I agree. I think you watch the news events. There is going to be something that shows strength by the end of this week. We don't know what it is. It potentially could continue to be yen. Maybe the Aussie and Kiwi get a bid. Something is going to be strong this week. Once we get that move, we'll be able to identify it, and then all of a sudden, the trades become much more clear once we get that. So focus on the news events, and as always, do your proper position sizing, risk management, everything that makes you a successful trader in the first place. Everyone have a great week and get ready for this week. This is going to be a great week in trading. Goodbye, everybody.